Are you thinking about investing in gold to diversify your portfolio? Well, for the layman, it's always advisable not to put all your eggs into one basket. Hey, and thanks for tuning in. Holly Shelter for kalkinemedia. A significantly weaker performance of the market was witnessed in the third quarter of 2021, owing to the pandemic, of course. So the topic of diversification has been on the minds of many investors yet again. And in September of this year, investors saw the breakdown of the relationship between bonds and equities, which inflicted huge losses on even the well-diversified portfolios. More risk assets may suffer due to the upcoming tightening cycle, which is driven by soaring inflation accompanied by slow economic growth. So, what does investing in gold look like right now? Gold has been a reliable investment option for more than thousands of years. It's been used for portfolio diversification, beating inflation, hedging against excessive central bank money printing, and also for balancing losses from the stock market as it uncorrelated to stocks and bonds. Investors are expecting inflation to rise, and with increasing volatility in equity and the bond market, well, several investors may turn to gold as a safe haven. Gold is proclaimed to be one of the best diversifiers amid rising inflation, but investors holding gold are likely to be disappointed with the protection provided by the yellow metal. Gold prices have a strong inverse relationship with real investment rates, which means that a rising interest rate leads to falling gold prices. This implies that despite gold being touted as an inflation hedge, it's not as such. Due to a surge in energy prices and subsequent supply chain constraints, interest rates may be hiked by the Bank of England or the US Fed to respond to the inflationary trends. But these factors are in fact disinflationary in nature, as they may lead to a reduction in the already low discretionary spending by consumers. Central banks may miscalculate the interest rates or raise them too soon, as they have no historical data to currently base these assumptions on. This means that government bonds are definitely not the answer for diversification, and in fact, probably gold isn't as well. Given that, the gold market continues to struggle in limbo. Gold prices haven't been affected by the increasing inflationary measures. The leading market participants are expecting a more aggressive action from central banks. However, gold investors should rethink before liquidating their assets, as they may be overestimating the aggressiveness of central banks regarding tightening of interest rates. A lot can happen over the next year or so, and gold prices may rise to record high levels in the long run, as it's difficult for central banks to exit the unorthodox monetary policies that they enter into in such times. Now that you're up to speed, check out some of our other videos to boost your financial IQ. If you like this info, why not sub to our channel while you're at it? This has been Holly Shields for kalkinemedia.